Okay, welcome to the channel. I'm going to go over some back testing results for an algorithm that I coded to hyper scalp the NASDAQ, the NQ futures. Okay, so here are the results here on the front end. Now, I'm going to go into more detail, but as you can see right here, the total P&L was 29,570. That was for May 1st, 2026 through May 29th, 2026, as you can see down here at the bottom. Now, there were 488 trades that were making. Those are longs and shorts together. The win rate is 29.3%. And the P&L is 29,500. Now, some people will say, well, how can you actually be profitable with like a 29% win rate? Well, your winners have to be bigger than your losers. So the average daily P&L, and we're going to break this down day by day, and I'm going to show you the trades, was $1,400 for the average daily P&L. Now, the profit factor is 2.03. Now, a profit factor just means for every $100 I lose, I make 203. That's basically what that is. Now, the max drawdown is 1,900, so I didn't blow any accounts. And this is a back test for May. Now, the average trade is 3 points. The average win is 20 points, and the average loss is 7 points. So as you can see, my average winners are a lot larger than my average losers. Now, the Sharpe ratio is 4.2. Now, as you can see right here on the equity curve, this is a custom platform that I built. I built my own back testing engine because I've been a software engineer for over 15 years. So I built my own custom trading platform, and I built my own custom back testing engine. And I'm using MBO data, market by order data from Data Bento. Okay, I'm using that for the NASDAQ, the ES, the gold. I'm using good quality data. And the reason I built my own backtesting engine is because, well, I need something that can do tick for tick data. So let's go ahead and take a look at the actual trades. Now, the trades on May 1st, there was 27 trades, 7 winners, 11 losers. The best winning trade was $2,800, and the worst was $300. The daily P&L was 3,800. So right there, you would have passed an account day one. Now, the way, and the ATR is roughly around 20. Now, the max drawdown for the day was $595. And the way that I wrote this is trading the NASDAQ. This is hyper scalping on a 3-second chart for stacked imbalances. Now, there's a lot more filters and a lot more things involved than just that. So, but I'm not going to get into detail. That's proprietary information. So the way I trade is when there is an extreme high ATR, I just don't trade. When there is low ATR, I size up. So if it's below, like it might be 20 or 25, I might size up to 5 contracts. When it's above, like maybe 25 to 35, I might go in 3 contracts. So you have to go in with the volatility. If the volatility ramps up, you have to size down. If the volatility subsides and it goes down, you can size up. And that's how I coded the algorithm to do that. So as you can see here on May 4th, we had 1,500, the best trade 1,600. But on the daily P&L, we have 3,800, 2,400, 2,400, 2,700. Now, and then right here, we have some losing days. We had negative, lost 360, lost 420. And that's fine. You're not always going to be profitable. And then some of the days weren't all that good. I mean, we had $500 day. Yeah, that's pretty good. But the ATR, we had trades. We had 15 trades, and the average ATR was like 30. So, you know, the volatility kind of ramped up a little bit. But this is what I want to get people to understand. Look at the average true range. There was 27 trades. The ATR was 20, $3,800. ATR 20, $2,400. ATR roughly around 16. That was 2,400. $2,700, the ATR was 19.5. Now, you had the $700 winner, the ATR was 17, so it kind of dipped around. 17 ATR at $1,500. But look at the losers. Okay, look at the losers. Negative 300. The ATR was 38. Okay, negative 400. The ATR was around 37. So when you have high ATR, and look at the ATR is 30, we got 940. ATR 30, we got 540. $1,200 day, we had ATR around 19.5. Look at that, $1,700 day right here, ATR around 19. $3,000 day, ATR was around 30. Okay, that was a little outlier. That's fine. Okay, we might have gotten caught on the good side, and we made some really good trades. Okay, the biggest winner was $1,400. But look at this, $2,000 day, ATR is 23. $1,800 day, ATR is 25. So that is what I'm trying to get across. When the ATR, this is going off of a 1 minute ATR. When the 1 minute ATR is above like 40, you'll hear me say on stream, size down or don't trade. So I normally just don't trade. When ATR gets over 35, I'm like, I'm thinking about shutting it down. So I just don't trade. And that is what you have to understand. Now let's go into detail because we have the stats here. This was a nice equity curve. We had some drawdown right in here. Okay, that was a drawdown right in here. But also another thing that you really have to understand is we didn't have any blown accounts. Okay, but let's go into really detail of the numbers. This is the backtesting engine. I wrote this right here is the front end part of it. Okay, and it reads the JSON from the back end. What I'm going to be doing for the NASDAQ, I am going to be forward testing the NASDAQ now. So this front end is going to be reading trades that it has taken with the forward testing. Forward testing just means I'm not going to be going in like 5 contracts or 3 contracts. It's mainly going to be either 1 or 2 contracts, because I need to forward test it. After that, then I'm going to start ramping it up. So let's go into detail. And also another thing, this is very important. Look at the session right up here at the top. It says session custom, because one of the parameters for the command line to run the backtest is a custom session, which I have set to 9:45 to 11:45. That is 2 hours of trading. So for 2 hours of trading from May 1st to the 29th, the total was $29,500. Average daily is $1,400. That is key right here, 9:45 to 11:45. Now, some people will say, well, why don't you trade after lunch, the late afternoon? Well, I ran the numbers. And the numbers show me that's when you start giving money back or don't make as much. So the ATR, the average true range, is going to be good between 9:45 and 11:45. Why do I start at 9:45? Well, if you hear me on stream, I always say, sit on your hands and let the market settle down. I've ran the numbers between 9:30 and 9:45 for this whole month. Was basically break even. I think I made, it was either I lost or made $100. I can't remember, but it was basically break even. So why would I do that? Why not just wait until the market settles down, start trading at 9:45? From 9:45 to 11:45 for 2 hours of trading, and you can make these kind of numbers right here. Daily P&L. I mean, you're passing evals left and right. So let's break this down, and let's break down the average true range, the ATR, okay? You've already saw the numbers here. Now, the total for the 21 trading days, the average ATR between all of this was 23.72. That's pretty good. Now, there are some days, as you can see right here, 33, 38, 36, 32, 32, 30, roughly 30, okay? So let's come down into here. This is the important part. This is an extremely important part, okay? ATR bucket analysis. This is a 1 minute average of the ATR, the average true range. How far does the NQ travel within 1 minute? Now, the ATR range, and then we have trades, then wins, win percentage, a gross win, gross loss, and a profit factor. Okay, profit factor just basically says, okay, if you have a profit factor of 1.5, then that means for every $100 you lose, you're going to make 150. That's basically $50 profit. Okay, just roughly, that is just basically what it means. An ATR range between 5 and 10, we had 11 trades. We had 5 wins. That's 45% win rate. Okay. Gross loss, gross win, gross loss, a profit factor of 2.7. Okay, that's good, but not enough trades. 15 to 20 ATR range, you had 222 trades, a win rate of 27.9%, and then gross win, gross loss, because my winners are bigger than my losers. Profit factor 1.9. That's good. And then 20 to 25, you have these numbers here, 168 trades. The gross win, 21,000. Gross loss, 9,000. 2.2 ATR. Profit factor of 2.2. Awesome. 25 to 30. Look at that. Profit factor of 3.7. That right there is the sweet spot. 25 to 30, but you only have 25 trades. Okay. Really, the sweet spot is right here between 20 and 25 ATR. 168 trades, 30% win rate, profit factor of 2.2, 21,000 win, 9,000 loss. Okay, this is looking really good. But look at this. 30 to 35 ATR range, 53 trades, profit factor of 1.6. It's starting to degrade as you go past a 30 ATR. Now look at this. 35 to 40 ATR, you've got 9 trades. Wins, you have 1. Win percent, 11. Gross win, 240. Gross loss, 1,000. And a profit factor of 0.2. That is a losing situation right there. So when someone says, well, why don't you just trade when the volatility is high? You can make a lot of money. You can also lose a lot of money. And also, the reason I don't trade when it's extreme high ATR, when it's basically above 30, the reason I don't trade is because the style of trading I do. There are some algos that you need an ATR above 30. But this algo is not built for that. This is trading the NASDAQ on a 3-second chart. It's hyper scalping on a 3-second chart. And it's looking for stacked imbalances. Stacked imbalance, let's say you have a stacked imbalance of long. So you have more buyers than sellers. Let's say you have 5 times more buyers than sellers. And it goes from like 2 levels, maybe from like quarter to a half. Okay. And you have 5 times more buyers on the quarter and a half level. That right there is a 5x ratio in levels of 2. Now, I'm not going to go over the settings and everything because everything's proprietary and this is not going to be released. This system right here that I'm showing you, this system right here is not going to be public anytime soon. This is going to have to be put on a co-located server with Rhythmic so I can have like a 1 to 5 millisecond delay. You do see it when I'm streaming. I showed you last week some of the trades that it was taking, some of the live trades and everything. I'm getting everything locked down. Everything's looking pretty good. But also, let's keep going through this, okay? We have a 14-day rolling ATR. 50% of the time is 24.9, and then the median is 26.8, last 14 days. Okay, back test results. We have 488 trades. Same thing as up here. Okay, we're just looking at it within the terminal. that I run the back tests. Now, here's the thing. We have a 29% win rate. We have break even 140. Winning, you have 143 winners, and losers, you have 205. The reason that the win rate is so low is because it goes off of this number here, 488. You've got a lot of break-even trades, which is fine. I don't care. I mean, you pay commissions, whatever, a little bit of slippage. And also, here's another thing. When you have high ATR, when it's above 40, you're going to get some bigger slippage. When the ATR is like 20, 25 ATR, the slippage, I mean, you'll get fills of like one tick. So the profit factor of 2.03. Okay, here's the thing. The average trade is 3 points. That's awesome. Average win is 20 points. The average loss is 7. That way, I'm getting a 2-to-1 to 3-to-1. Okay, that's why I can have a low win rate of 143 wins and 205 losses. I cut my break evens. I cut my trades when they're not working out. I cut them quick. Max trades. Okay, so right here, let's really break this down. Okay. Max drawdown, 95 points. That's $1,900. You're going to blow some accounts. This one didn't blow accounts, but you got to think about this. Your average loss is 7. Okay. The thing is, when you take 7, okay, let's take 7. Your average points on loss is 7 times 20. That's $140. Let's say you're trading 5 contracts. That's $700. But you got to blow up at 2,500 divided by 700. You're only allowed 3 trades before you blow up. Now, for some reason, now I do scale. Okay. So when ATR is high, when it's between like 20 and 30, I'll go in like 3 contracts. So it's not that much. Okay. Because I'm trying to find the sweet spot to pass evals on this. And also for funded accounts, you don't trade that much. You slowly grind it up. But I know some people are going to say, well, you've had a few good trades, and that's why you got 29,000. Well, the outlier analysis, let's take the top 5 trades, okay, which is a long, a short, a long, and a short in the P&L, 2,800, 1,600, 16, 1,500, 1,500. Okay, let's exclude the number 1 trade. Okay, the profit was 29,500. Now the P&L is 26.7. Well, the profit factor was 2.03. Now it's still 1.9, even when we eliminate the best trade of the month. Let's eliminate the top 3 trades. You still got a profit factor of 1.8. You've eliminated some of your top 3 trades, 1.8. So what this is telling you is the back test with like roughly 500 trades, you don't have an algo that's just having like 2 or 3 trades that are massive. I've just eliminated the top 3 trades, and I'm still at a profit factor of 1.8. That's extremely happy with that. Okay. Now the prop firm simulation, I have it here. Accounts passed 8, accounts blown 0. That's just like a prop firm simulation of, hey, do I reach the 2,500 drawdown? If I do, then the account's blown. I'll move on to the next one. Also, another thing that you have to understand, and let's come back over here. What you really need to understand, this is important. I mean, these are pretty good numbers. But right here, let's say the negative 500. Once you start hitting like negative 500, roll over to another account, okay? Once you get this 3,800 in one day, okay, that's great. You have a passed, okay? 2,400, that's great. Let's say you take on May 4th, let's say you were down $500. Okay, as soon as you hit $500, roll to another account. Just keep rolling, okay? Because what if you have $1,000 or $2,000 losing day? For me, I would rather have a $2,000 losing day over 5 accounts than a $2,000 losing day on 1 account. Why? Because I'm rotating them. Because I know there's going to be drawdown. Okay, I know there's going to be drawdown. This equity curve is looking great. right here, we had a nice little drawdown. We had 1900 drawdown, max drawdown 1900. That was probably right up in here. So once you start getting like negative 500 drawdown on an account and you take a losing trade, just roll to another account. Don't sit there and keep building up to a blow up on an account. You can save that account because not every day is going to be profitable. Just roll to another account. You never know. You'll take a negative $500 hit on one account. And you're like, oh man, that kind of sucks. Well, yeah, it does. And then next day or further on down the month, you'll trade that account and then end up with like a $1,500. Okay, end up with $1,000. Okay, so that's great. Roll them so you don't blow them. I just wanted to go over. This is the NASDAQ. Okay, this is an algo that I'm going to be trading. Well, actually, I did trade it last week, and I was on stream and I showed some of the trades. There's some things that I had to fine tune this weekend, and the gold algorithm, the gold algo is going to be trading a funded account next week. Now, the NASDAQ, I'm going to be trading some evals, and once it passes some evals, then I'm going to unleash it on a funded account. I got a bunch of funded accounts, and I'm going to let them loose on there. So I just wanted to go over some numbers. And the main thing I want people to get across on this video is this right here. When the ATR starts ramping up, you need to start ramping down on your size. You can easily get the Ninja Trader add-on and manually trade the stacked imbalances. I show you on stream. I'm going to be putting out another video with gold on a 30-second stacked imbalance chart that you can manually trade. Okay. And the Ninja Trader add-on has it. So that's all I have, folks. Make sure you like and subscribe. Later.